This is the Truckers Network radio show on tncradio.live, where we offer the news, weather, traffic, information, and entertainment our drivers want and need. I'm your host, Shelley Johnson. It's coming up on tax time again, and tax preparation is something every driver and owner-operator dreads. Getting the most out of deductions and expenses and staying in compliance is a major headache. That's where tax professionals come in. Today, we have Tax Manager Michael Schneider and Tax Resolution Manager Charlotte Cowie-Bosner from the American Truck Business Services, or ATBS. The founders of this firm grew up in the trucking industry. They ran their family's fleet before handling business solutions like accounting designed for drivers. Welcome, Michael and Charlotte. Thank you for being back on the show with us.
Thanks, Shelley. Glad to be here.
So the dreaded tax filing deadlines, fast approaching. I don't think there's anybody who likes filing tax returns, least of all drivers and owner-operators. What are some of the things that they need to know that will impact this year's tax filing?
So unlike the last couple of years, most of the extensions are gone. Through the pandemic era, they were looking at, May 15th, June 15th, even July 15th. Some states were even later for the filing deadline and payment deadline. This year, we're kind of back to status quo, if you will, with that April 15th. The caveat on that is we've got a Saturday, Sunday involved with a holiday on Monday. So tax day this year, April 18th, they give you a few extra days to file and to pay. Most important thing to remember about that April 18th deadline is that is the payment deadline. No extensions, no questions asked. You've got to pay your balance due by April 18th. There are filing extensions available. If you're not quite ready to fill out all those forms, you can get a 6-month extension, and that'll give you until October 15th to actually file the return. Most importantly, pay those taxes, pay those estimates. Hopefully you've been putting money aside for tax estimates, and you can pay that in as a best guess by April 18th.
What's considered a best guess so you don't get hit with some sort of penalty if you do have to file an extension?
Yeah, it's different for everybody, really, based on our progressive tax system. You could be in a very much different tax bracket than another taxpayer. You could have situations like kids or college tuition, extra credits and things that you get to write off on your taxes. So it's very variable for that reason. But typical rule of thumb that ATBS tells drivers is about 25 to 28% of your net pay. So that's net pay is what you take home, not what you're grossed on, not your 1099, but what you are taking home at the end of the day. So say that settlement check is $1,000 to you at the end of your trip. You want to save $250 of that, set that aside for taxes.
Okay. So that's a general rule of thumb that'll keep you within compliance and you won't come up with a nasty surprise.
Absolutely.
Mm-hmm. Yeah, because penalties and interest, that can be pretty pricey, can it?
Absolutely. Yep.
Yeah, so the IRS has a few different types of penalties: failure to pay, failure to file, and then interest. And the interest does compound daily, so different than other types of debts we can accrue elsewhere in our financial lives. This quarter, it's 7%. And the penalties for not filing and not paying can cap at 25% of what you owe and 35% of what you owe, respectively. So it's really important. We always say the best way to not be charged a penalty is to do what we can to avoid it ever having been charged, right? So
Sure.
I know that may on its face sound simple or trite, but at the end of the day, getting any amounts paid in by April 18th that you can towards your current year's tax bill is going to save you a lot.
And if you happen to pay in more, the IRS will refund the difference, correct?
That's correct.
Mm-hmm. Do they pay interest or not?
They do.
Oh, okay.
If they're behind. So if they pay you later, then they should have. So they've processed the return, they've not issued the refund. They will pay out interest. They'll also pay out interest on refunds issued from amended tax returns.
Okay. Well, that's good to know. I don't think a lot of people assume that there's interest that the IRS ever pays. So
I wouldn't use it as a retirement strategy.
Probably not. So, what has changed in the tax law since we last spoke? I would imagine it changes every year, doesn't it?
Absolutely. Most of the things this year it's kind of odd to explain, but it's not as much changes as new things being added. I mean, there were some things like energy efficient credits for your home, a lot of new vehicle credits coming out for personal vehicles. I know I heard some drivers talking about solar panels for their trucks. So there's a few new things like that that are absolutely deductible and incentivized through tax credits and deductions. But most of what we're looking at this year is everything coming up to expire. So they call these kind of patches or band-aids that they pass every couple of years, and then they come up to expiration and they decide if they're going to continue doing them. So like last year, as an example that hit a lot of folks, was that child tax credit. So if you did have kids, they increased that from $2,000 to $3,600 if your kids were under age 6, and to $3,000 if your kids were under age 18. So two changes that happened this year is we're back to the 2,000 for every child, regardless of age. And that is tough for a lot of people because they really were relying on that extra credit for their kids. Anybody with kids can tell you it costs a lot more to raise them than that, but it did on the tax side, to get a little buffer there. So those are some of the things that expired. A lot of the stimulus items expired. They were, giving those checks out for the pandemic, and those are gone. If you hadn't received those, obviously that was going to help offset your taxes when you did go to file. So a lot of people are actually looking at higher tax bills or smaller refunds, depending on the situation they're in.
I think a lot of people wonder where the IRS comes up with their figures, like the child tax credit. Like you were saying, it takes a whole lot more to support a child than that. What decade or what century are they working in when they come up with these numbers?
A lot of the time, we do have to look at Congress and how Congress determines changes to those sorts of credits, incentives, the tax code, etc. So we can't really speak a whole lot to the mindset or where they're pulling these figures, but that is who we would want to direct questions to at the end of the day.
Sure. So if Americans say, hey, this really needs to be revisited, write your congressman, right?
Yes.
Makes sense, because that's what leaves a lot of people scratching their heads. It's like, where do they come up with these formulas? And it so often seems like fuzzy math to most people,
Yeah, it can definitely feel a bit out of touch, certainly. But if folks, try and stay engaged with that, that's where that would be directed.
Are there some big no-nos that drivers or owner-operators, obviously they both, if a driver's an employee, they have a different situation than, say, an owner-operator. Are there things that they really need to be mindful of when filing their taxes?
The largest one we've talked about is the tax estimates. That's really what tricks people up, is the self-employment and Medicare tax. So we refer to that in the industry as self-employment tax, but really that's the tax that is being withheld as an employee. Your employer is doing that for you. That's why you don't get your hourly rate of pay on your paycheck. They're taking those taxes out and they're sending them to the Social Security Administration, Medicare Administration for you or on your behalf. And then when you become self-employed, all of a sudden there's nobody doing that. Those taxes are still accruing and they're still due at the end of the year, but nobody's withholding them and paying them for you. So that's where the surprise really comes in for owner operators when they go to file their taxes. Not only are you paying income tax, but you've also accrued this Social Security Medicare tax over the last 12 months. So that's 15.3%. And that's what really trips people up. People here set aside 25% and they say, Michael, how'd you come up with that number? Well, it's simply a 10% income tax and a 15% self-employment tax. That's how we're getting to the 25%.
Sure. And if somebody's been an employee, they're used to, in terms of the Social Security and Medicare deduction, they're used to paying half that.
Exactly. Yep, absolutely. Now, they self-employed individuals do get a deduction for the half that their business is paying. You don't get a deduction for the part that you're paying, It does help a little bit, but yeah, it's just a big tax bill at the end of the year to worry about that you're just not always prepared for.
Oh gosh, yes. And everybody dreads it. Everybody wants a refund. Nobody likes to pay in. And would you say the vast majority, if somebody has to pay in, they're going to wait till the very day that it's due?
That's typically what ends up happening. Yeah, it's unfortunate, but it's scary to have to deal with that and face that tax bill. Sometimes you want to procrastinate it and put it off for as long as possible. So that does tend to happen.
Well, if there are too many zeros when you're writing a check and you can barely fit it on the check, you don't want to pay that. you know. So it's understandable. But I know that there's a lot of confusion and dread that goes with all of this, and certainly fear to stay in compliance. And it's so easy to run afoul without consulting a professional like yourselves. We do have to go to break here. I've got more questions, and I know that our listeners will too. You're listening to the Truckers Network radio show here on TNCradio.live. We're talking with Michael and Charlotte from ATBS, or the American Truck Business Services, about accounting, what you need to know about tax time, which is unfortunately, yes, it's coming up April 18th. So definitely stay tuned for more great information right here on TNCradio.live. The Truckers Network helps professional drivers save money and makes their lives easier. We were created for drivers by a commercial driver. We know the industry and driver needs. A Truckers Network membership offers exclusive discounts through our trusted partners on things like truck care, truck parking, tires, oil changes, fuel additives, fitness, roadside assistance, first aid kits, driver training, and a whole lot more. Start saving today. Check us out at app.thetruckersnetwork.net. That's app.thetruckersnetwork.net. The trucking industry keeps America running thanks to the 3.36 million professional truck drivers who deliver everyday goods to 80% of American communities who rely on trucking for that last mile. The industry represents a diverse group with nearly half of drivers at 42% as minorities. Trucking Moves America Forward, or TMAF, educates the public on the essentiality of trucking by telling the story of trucking and its positive impact on our economy, communities, and lives. Learn how you can join the industry movement by visiting truckingmovesamerica.com. Welcome back to the Truckers Network radio show on TNCradio.live. I'm Shelley Johnson, and I'm talking with Michael Schneider and Charlotte Cowie-Bosner from the American Truck Business Services, or ATBS. We've been talking about some of the things you need to be mindful of in filing your tax returns coming up. Per diem and depreciation are some huge topics for our driver audience. I was wondering, what do our listeners need to know about that?
Yeah, it's a great question. So per diem, we've actually enjoyed a really nice last 2 years of 100% deductible per diem. This came from I think it was the Rescue Plan Act, where they wanted to incentivize the economy a little bit. They wanted to help restaurants out because they were struggling during the COVID pandemic, especially the restaurants were. And so they introduced a rule for businesses that you could deduct 100% of your meal cost so long as it was purchased from a restaurant. ATBS got involved with the authors of that new law at the IRS, and we asked them, well, what about the truckers that claim per diem? After some back and forth, they came back and did write an article after that per diem was included in that 100%. So for 2020 and 2021, I'm sorry, 2021 and 2022, I'm getting my years mixed up now. We all enjoyed 100% per diem deduction, which was for most of that time, $69 a day. The law, as I talked about a second ago, has changed. It's back to the regular 80% for this year, for 2023. So if you are using a tax preparer that's not ATBS, make sure they understand that you are entitled still on your 2022 tax return that you're filing this year to 100% per diem. It's not until we file next year that goes down to 80%. So that's a big change. 80% of $69 now being $55.20 as opposed to the $69 per day. So still a strong benefit for drivers to claim on their taxes, but not quite as valuable as it has been in the last 2 years there.
Now, I know that the listeners are going to probably say, with the costs going up, why would that go down?
Yeah, absolutely. And it's really just going from 100% to 80%. I was actually very surprised this October with the inflation numbers that had come out in those reports. They typically change per diem in October. It's effective October 1 each year to September 30th the following. And I was very surprised to see that the IRS did not adjust per diem. I do expect them to do it this year. I can't read the minds of Congress and the IRS, unfortunately, but I do expect with the way that inflation has gone that they will increase per diem this year. So we'll just have to wait and see what they do. But that typically changes around October 1st.
Okay. And with the hyperinflation, I mean, some of the pricing, certainly with diesel and everything else, is it ever common for the IRS to change and get more generous more often, or is it only once a year?
Actually, they did that this year with the mileage deduction for your personal vehicle.
Okay.
So they did recognize that fuel cost was increasing rapidly, and taxpayers were looking for some help there. So they increased the mileage deduction in from January to June. This is a little bit odd, but from January to June they did 58.5 cents per mile, and then in July they increased it again to 62.5 cents per mile. So they increased it by 4 cents in the middle of the year. So that's another one to look out for as you're maybe typically to one mileage percentage all or one mileage amount all year. You actually do have to consider the change that the IRS made in the middle of this last year in 2022. So
Now,
that is a little benefit.
in order to claim that deduction, you need to be aware of what time segments you were driving. So part
Yep.
of the year would be less than going forward.
Exactly. Yeah, you want to definitely keep all the IRS records, that being logbooks, essentially like we used to do paper logs before ELDs. You need to keep essentially a logbook for your personal vehicle to track what mileage and what purpose of the trip it was. Was it a personal trip? Doesn't matter for your taxes. Was it a business trip? Run into the parts shop or picking up some food, run around town to get some business items done, whatever it may be. Those business trips are absolutely qualified for the deduction.
How detailed does that have to be? Just basically, because I'm sure, drivers are like, I don't have time to type all this stuff in.
Absolutely. Yeah. A lot of the things I recommend are apps these days. ATBS doesn't have a mileage app for folks, but one that I really like and hear good things about is Mile IQ. I don't know if I'm sure there are others out there. That's some that our drivers have referred us to and say, oh, this is a good one that we use. But that apps are just so much easier to track things that way. But if you're, old school paper log, they want the place and the distance and the purpose. So they want those three pieces of information.
Okay. And do you also have to log the personal?
You don't have to, but it's a good idea to. The
Okay.
reason being, if you drove, we'll just keep an easy example, 100 miles, you would need to know how many of those miles were personal and how many were business. Obviously, you can kind of back into one or the other,
Mm-hmm.
but you would need to know the total trip. And sometimes that's harder to track. If you forget to write down your odometer at the beginning of the year, you do kind of want to track both personal and business all year. That just makes it a little easier to back into the numbers.
Now, do you need the odometer reading for every business trip you take?
You don't need that information. It is helpful. I've had people lose records in a fire, a flood. We heard about all these terrible tornadoes recently. So there you do lose information. IRS allows you to recreate that. So you
Okay.
might have, hey, you had an oil change and they wrote down your odometer mileage when you did your oil. So you can recreate records like that.
Okay. So that's good to know because I think there's major panic when people lose their documentation. They're thinking, oh my goodness, they're going to disallow this and I'm going to end up owing more than I planned.
Yeah, terrifying. Absolutely.
Now, in terms of depreciation, how does that work?
Yeah, so another big change, we've been now on a couple of years, and this goes all the way back to 2018 with the Tax Cuts and Jobs Act. We had got to enjoy the bonus depreciation, which was somewhat new, but it comes around from Congress every so often. And what bonus depreciation did is they expanded that to include both new and used assets. So if you bought a new truck, a new trailer, or a used truck, used trailer, and started using that for your business, and I'm talking the tractor trailers, the over the road ones, you could take 100% of your depreciation or 100% of that cost as a deduction in that first year of purchase. That was enticing. That's a huge incentive for businesses to go replace equipment, and it stimulates the economy. So it was a win-win for both sides. They did write that into the law to phase out. So what that means is starting this year, 2023, we've enjoyed that for 100% for 5 years. It is now going down to 80%. The following year will be 60%, 40%, so on until zero. So that will phase out 20%, and I believe that year is 2025 that it goes back to zero. So we'll see if Congress takes action in 2025 to renew that. So one of the items that drivers can think about is maybe they can't use bonus depreciation like they did in the past. They still have Section 179 depreciation available to them. The big difference is bonus can make you actually go into a loss situation where you may have earned money, but your tax return shows a loss because of the bonus. And that can be helpful to offset other income. If you have a spouse working or you have 2 or 3 other businesses you're operating, maybe a rental, all those sorts of costs can then be lowered by your trucking business loss. Section 179, you cannot write that into a loss. The best Section 179 can do is get you to zero. And sometimes it's not even enough to get you to zero. But that's the big difference. So you still have that available to you. You just can't create a loss with Section 179.
Now, wasn't there a section where, with the tax reform, if you had a work vehicle, a certain weight, you could depreciate the entire thing in 1 year? Am I correct?
Yeah, that is the Section 179.
Okay.
Yep, exactly.
Okay. But it has to weigh what? Over 5,600 pounds or something?
Yeah, I think you've nailed it on that one. I can't remember that off the top of my head, but it's big, heavy vehicles. They're not talking about passenger vehicles like your car, your truck, your van, anything like that. They're talking about big equipment.
Now, are semis, certainly they're expensive. Are they subject to the luxury tax or anything like that? Because I know that used to be an issue.
No,
vehicles.
thankfully they're not subject to those special kinds of taxes. Obviously, you'll pay quite a bit when you go to register the vehicle and get permits and licensing. They do collect typically road tax like that on the weight of the vehicle and the age of the vehicle. So a lot of the times you're going to get hit pretty hard at the Department of Transportation when you're registering.
Sure. Oh gosh, yes. It's painful. No matter how you. So, any of the listeners can see filing taxes as a driver or in transportation, it's complicated. So would you say that that's why it's really important for drivers, owner-operators to go to an accounting firm that understands trucking?
Absolutely. I mean, a lot of CPAs out there, nothing against them, but they're dealing with, retail stores or restaurants or barbershops, construction workers. Their trucking is its whole thing on its own. They don't maybe even know about per diem. They may not know about the bonus or Section 179 depreciation for the equipment. So it's really important to find somebody that specializes in trucking and understands what those guys are going through over the road. I mean, even sending in information can be challenging because you could be in any of the 48 states. We got to go find out where you're at and how to get information from you. And we're uniquely equipped to do that at ATBS.
We often kind of say it's like, if you need to hire an attorney, you need a family law attorney. You're not going to hire a criminal attorney, right? You want somebody that specializes in what you're dealing with.
Well, certainly, if you don't go to the right specialist, they're not going to be able to do the job. And if there's some deductions that you could take, they could end up costing you more money if they don't understand all the ins and outs, for sure. So that makes total sense. We have to go to break here. You're listening to the Truckers Network radio show here on tncradio.live. I'm talking with Michael Schneider and Charlotte Cowie-Bosner from the American Truck Business Services. That's ATBS. They've got some tremendous information. We've got some more to pass along to our listeners. So stay tuned for more right here on tncradio.live. TNCradio.live is proud to carry the Steve Summers Overnight Drive Show. TNCRadio.live is dedicated to commercial drivers. We offer the news, traffic, and weather you need, and the entertainment, sports, talk, music, and celebrity interviews you want to hear 24/7. We have original shows and trucker podcasts that feature some of your favorites, like Ice Road Alex Debogorski and America's Truckin' Sweetheart Marcia Campbell. TNCRadio.live is convenient and designed for professional drivers. The best part is we're free, and you can listen anywhere you are on the road. With just one tap, you can tune into Steve Summers and us right on your phone. Simply download our app by going to app.tncradio.live. That's app.tncradio.live. Welcome back to the Truckers Network radio show here on TNCRadio.live. I'm Shelley Johnson, and I'm talking with Michael Schneider and Charlotte Cowie-Bosner from the American Truck Business Services, or ATBS. We've been talking about taxes because we've got taxes coming up. It's tax season. You know, some people haven't filed in a couple of years, and they're just plain afraid. What do they do in that situation?
Yeah, so it can definitely be a hurdle that feels pretty overwhelming, right? If we don't have our documents gathered for the last several years, we've maybe not filed since we started a business or started our trucking business, and it can be a little bit of a daunting task to jump into getting that corrected. The IRS indicated to me a few weeks ago, just in having a conversation with them about procedural changes, et cetera, indicated to me that they're starting to crack down on non-filing across the board. In trucking, we run into, a lot of time drivers haven't filed in, 3, 4, 5, 7, 10 years sometimes.
Woo.
And it can feel like a really big task. So a couple of things that may make that seem a little bit less daunting. The IRS can only require that you file the last 6 years. They can't force you to go back and file older years than that in most cases. If you don't have, say, your 1099s or W-2s from the last several years, we can contact the Internal Revenue Service and help you obtain that information. So that information's not lost just because maybe you don't have access to it or have misplaced it or something along the way. And then ATBS does have a lot of structures, as many, accounting firms and accountants do, to help you gather that information for those years. The importance of getting caught up on filing is that if we don't file ourselves and say, whomever has issued our 1099 or W income to us has reported that they paid that income to you, to the IRS and Social Security, as they're required to do by law, the IRS knows that you've made money, right? They do see that you've not filed that tax return. In trucking, this causes a lot of problems because the IRS will file that tax return for you, but they're not giving you any credit for deductions that you would be eligible to claim. So this oftentimes translates to much higher tax liability or tax debt than you would reasonably need to pay the IRS if you filed those original tax returns. So it's really important to get caught up on filing just so that you don't end up in a position where the IRS is trying to collect a much higher debt from you. For one quick example, we recently worked with a driver who the IRS believed owed them about $230,000 for about 5 years worth of taxes that they hadn't filed. We got those returns prepared and filed, and it knocked their liability down to about $30,000. So we don't want folks overpaying or the IRS believing that you owe these giant tax bills when it really isn't appropriate.
Now, are there actual penalties for not filing?
There are. If you owe tax and haven't filed, then yes. If you're due a refund or zero tax, then there's not a penalty for non-filing. But if you do file late or haven't filed at all, there are really hefty penalties surrounding that filing delinquency.
Okay. Yeah, I think people, once they get behind, they're just afraid. I think that they're afraid to file because they're afraid that that's going to put them up on the radar or something.
Right. When in reality, you can be on the radar already, but if the IRS files that tax return for you, they're not taking into account what's in your best interest as the taxpayer. They're taking into account what's in the government's best interest and how they can try to collect a tax debt that they may be due.
Sure.
So, that's really where the importance of that filing piece comes in.
Now,
Right.
how aggressive can the IRS get in those situations? Do they send out a letter? Do they come knocking on your door? Do they levy your bank account? What do they do?
Yeah, so that's a big question all in one, but to address it just quickly, piece by piece. If you've not filed and the IRS has determined that you should have, they'll go ahead and file on your behalf. If there are balances that you owe, either from those what are called substitute filed returns or returns that you have filed yourself, so originally filed tax returns, then you go into the collections department with the IRS. At that point, they issue you a series of notices. They're required to send out a series of notices on each tax year before they can ever take direct enforcement. So if you start getting notices in the mail from the IRS, be sure to reach out to a tax professional, ATBS or somebody that you trust locally to you, to verify the validity of the notice. There are a lot of folks that mail out scam types of notices or trying to scare folks into paying money that isn't actually, going to the IRS. But they'll issue you a series of notices. If you leave it unattended, then they can levy your bank accounts, they can attach to your wages, they can garnish your 1099 income, as well if they know for whom you're driving. So really the big thing is, addressing it sooner rather than later helps avoid those bigger ramifications down the road.
I've heard they've gotten more aggressive with their tax collection and they're even hiring collection agencies. Am I correct on that?
Yeah, so they do have 3 outside collections agencies that they can refer taxpayer balances out to. And then those private debt collectors will, pursue those debts. So they do have 3 of those agencies that they began using about 3.5 years ago. They're also currently budgeted to hire agents over the next 10 years. That's, I think, what we've all heard on the news, the 87,000 agents that the IRS is hiring.
Yeah, that strikes fear in a lot of people's hearts.
Yeah, definitely. And a lot of those folks are being hired to help process tax returns, work in the examinations unit, but also to be customer service facing. Last I heard, the IRS was able to answer 25% of their inbound phone calls. So as scary as it does sound that they're hiring a lot of agents, and as much as that does mean that they will be collecting at a quicker clip in a lot of cases, it should also start helping kind of free up the customer service issues they've encountered the last few years as well.
Oh, yeah. People were sitting on hold for what, an hour at least?
At least, yeah. So, I've heard folks try to call, 3, 4, 5 hours and not be able to get through.
Oh my goodness. It's like you take a day off to call the IRS. Who wants to do that? Yikes. So essentially, the best rule of thumb is don't get behind. How far back can the IRS actually go back? I think there's some confusion there. You said there is a statute of limitations, correct?
Yeah, so there's a statute of limitations on debts that we owe. And there's also a statute on how far back they can require you file if you've not filed. So, and that's where a lot of the confusion comes from, I think. If I owe a tax debt, the IRS has 10 years to collect that debt from me from the date that it pops up on their system. If they aren't able to collect that total debt from me by that 10-year mark, the remainder of what I owe goes away. So that's another thing, there is always light at the end of the tunnel. These debts are not going to follow you around forever, but the sooner you file, the sooner that 10-year clock starts, right? And you don't necessarily want to give the IRS more time to collect from you if you can avoid it. As far as filing, they can only require that you file the last 6 years if there's a filing delinquency. So, it does get a little confusing with those conflicting statutes.
Yeah, it does. So if you haven't filed in the past 10 years and you finally decide, okay, I need to get caught up, you need to file at least the past 6 years.
Right. Generally speaking, that's all the IRS can require from you.
So I think that there's probably also the perception if somebody decides to get caught up, that's going to put them on this bad list where they're going to be monitored by the IRS. Is that true or?
It is not.
Okay.
So while it is true that, if you get caught up on filing and you do have debts that you need to be in a payment plan for, or alternate resolution strategy for, you do have to remain in future compliance. So you need to file and pay on time moving forward. Any agreement you have with the IRS will default if you add a new balance or file a tax return late, any of those types of things that would sacrifice the compliance you're in.
Mhm.
As long as you maintain current compliance moving forward, there are protections in place. The Taxpayer Bill of Rights protects you from, feeling harassed or that the IRS is doing something procedurally unsound or targeting you. So as long as you get into compliance, get into a payment plan, the debt's being managed and you're staying in compliance moving forward, then it's not like you have a target out there on you.
Whereas I think a lot of people feel like they do have a big bullseye on their back if they get
Certainly, yeah.
behind, because it's so intimidating and it's so complicated. People just want to run away, bury your head in the sand type of thing. So
Definitely.
nobody wants to play ostrich when it comes to the IRS, for sure. We do need to go to break here. You're listening to the Truckers Network radio show on tncradio.live. I'm talking with Michael Schneider and Charlotte Cowie-Bosner from the American Truck Business Services, or ATBS. They've got some more great information about taxes and things you need to know, so stay tuned. Coming up right here on tncradio.live. The Truckers Network helps professional drivers save money and makes their lives easier. We were created for drivers by a commercial driver. We know the industry and driver needs. A Truckers Network membership offers exclusive discounts through our trusted partners on things like truck care, truck parking, tires, oil changes, fuel additives, fitness, roadside assistance, first aid kits, driver training, and a whole lot more. Start saving today. Check us out at app.thetruckersnetwork.net. That's app.thetruckersnetwork.net. Welcome back to the Truckers Network radio show on tncradio.live. I'm Shelley Johnson, and I'm talking taxes with Michael Schneider and Charlotte Cowie-Bosner from American Truck Business Services, or ATBS. They've had some terrific information that they've been sharing with our listeners. I think there's some deductions that drivers may not know about. I was wondering if you could share some of that information with our listeners.
Yeah, absolutely. So the biggest thing to reduce your tax bill is to get tax deductions. Now that's easier said than done sometimes, but you can think of your primary ones: your fuel, your maintenance, your insurance, your truck lease. All of those things are ordinary and necessary expenses to operate your business. They're all deductions off your taxes and lower the amount of taxable income that you're going to be calculating your tax on. So the idea there, before I jump right into this, because I have a lot of suggestions for folks to go out and buy stuff and get tax deductions, but I always want to educate and lay out for folks that a tax deduction is not a dollar for dollar reduction of your tax bill. So if you go out and spend $1,000, you're not reducing your taxes by $1,000. You're reducing your taxes back to that 25% that I talked about when we recommend folks save 25%. So if you go out and spend $1,000 on things that you want for your business but don't necessarily need, you've actually made a poor decision. Because you've spent that $1,000 and you've only saved from the IRS $250 or 25% if that's the bracket you're in. So I do suggest a lot of these things are tax deductions, but don't go out and just buy a bunch of stuff that you don't need. Buy things that you need for your truck. And I know a lot of the guys out there, they're very proud of their trucks, and their trucks actually look awesome as I drive with them on the highway. Chromed out, and it's a awesome Freightliner, Kenworth, Volvo, whatever it may be. And they just look great with all the lights and all the chrome. But if you have the money to spend and that's what you want to do with your truck and your business, that's great. That's a tax deduction. But if money's tight, don't go out thinking, well, I'll spend my last bit of savings so that I don't have to pay the IRS, because that is not actually how that calculation works. So to walk through deductions a little bit, it's anything that's ordinary and necessary for your business is a deduction. The IRS keeps it very simple. They don't, as much as people think, want to go in and tell you exactly what you can and can't do. They want to keep it broad. And so they say whatever is ordinary and necessary. And that's the only definition you have to remember. So, I throw things out to drivers all the time that they didn't cross their mind. So if you think about like a mattress, a television, microwave, fridge, maybe you're wearing gloves or like a weather jacket, like a Carhartt, sunglasses, all of these things are tax deductible that you're buying out there on the road. So keep all of those receipts, send all of those receipts to your accountant to get those write-offs. Again, don't go out and just buy stuff you don't need. But if you're buying a new mattress and bedding for your truck, a television or a microwave fridge, all of those things can add up and get quite expensive. But you can write them off of your taxes and help out at least a little bit there.
Yeah, I don't think a lot of people think about all of that. Sunglasses. I mean, it makes sense. You need to have something that's going to stop the glare, and it's part of your job. So,
absolutely. Some of the favorite deductions that I like to talk about are then you're in a place where you've got maybe a little extra cash flow. And I get this question from very successful drivers that are out there, and they say, okay, Michael, I've done all the things that you've done. I haven't spent anything extra, but how do I get some more tax deductions? How do I lower that tax bill a bit further? Well, there's where you get to start thinking about benefits to yourself. Just like employer might offer a retirement plan or health insurance. Those things start to come to mind. If you have that money available to you, your truck and your operation are running smoothly and are running well. You've got what you need set aside for maintenance. You've got what you need set aside for taxes. Now you can start thinking about what sort of benefits can I provide myself or even employees if you have employees. So you can start to think about saving for retirement and things like that. So there's like SEP plans, IRAs, 401ks. You can contribute to many of those, set those accounts up. And those are my favorite deductions, because the way I say it is you get to keep your money and you get a tax deduction. So if you're contributing to a SEP, you're saving for your retirement. You haven't spent any money. You've put it into an account that's saving for your future, and you're getting a tax deduction. Same applies to health insurance. You're providing yourself a benefit that you and your family can use to just lower the cost of going to the doctor and keeping yourself healthy, and you get a tax deduction for purchasing health insurance. HSA is another one. Oh, go ahead, Shelley.
Quick question on that. If you're buying health insurance for your family, is the tax deductible portion only for the driver?
As long as you're not offered an employer plan. So if you say you have a spouse that has an employer and they offer a plan, then that's when things get a little dicey. But if you don't have that situation, you're the breadwinner and you're providing the insurance for your family, all of the premiums are deductible.
Oh,
they don't exclude your spouse and children.
Okay, that's good, because oh my goodness, the cost of health insurance is just skyrocketed. So
it absolutely is so expensive. Sometimes the second or third highest cost on somebody's tax return.
In some cases, it's higher than a mortgage payment every
Absolutely.
month. Yikes.
So one other one related to health insurance that I really like is the health savings account. And if you're using that high deductible health plan, which a lot of folks use if you're very healthy or very sick, not for the folks that are in between, but those folks that are on the either end of the spectrum there for very healthy or maxing out the deductible every year, high deductible health plans can be extremely helpful because you open up a health savings account. This money goes into the account tax-free. And if you let it sit there and grow, it grows tax-free. So that can be a very, very valuable resource. Almost acts like an IRA, but it's saved in reserve for your health insurance costs, whether it be health insurance co-pays, prescriptions, whatever that may be that comes up for you.
And in many cases, depending on the age of the driver, it wouldn't have to be taxable until the age of 72 or 75. I think that keeps going up.
Absolutely. Yeah, they keep changing that date on us, but those funds can be extremely valuable. So you're saving for retirement and you're putting money aside for your health. You got to treat your health like you do your truck. You've got to set money aside to take care of your truck, and you got to set money aside to take care of yourself.
Yep, absolutely. Well, these are all really good tidbits of information that our drivers need to know. And I think when given the choice, instead of paying Uncle Sam, people would rather pay themselves and save for the future.
Absolutely. Yep. And I just don't want folks to mishear me and say, go spend all your money and put it into one of these deductions or accounts, because you gotta save some for IRS. They're gonna have their hand out at the end of the year.
Right. As the statement is, they want their pound of flesh, right?
Exactly.
So we have a few minutes left. I wanted you to share with everybody where people can find you, where you are on the web, and what kind of services you provide.
Yeah, so they can find us pretty easy, atbs.com. That's a definite easy way to locate us. We're on Facebook, Twitter. What else are we on?
Instagram, YouTube.
Yep. Oh yeah, our
LinkedIn.
YouTube channel is getting pretty popular. You can find some helpful videos there. We've got a phone number for folks to call in if they'd like to use us for service. That's 866-920-2827. So we would love to talk to you. We work exclusively with truck drivers, so it is our passion. It is what we do. We have full service bookkeeping. We have payroll services. If you're looking to incorporate, making an LLC or even a higher level S corporation or partnership, we work with those drivers. We can help you set up those entities correctly. See a lot of mistakes from the trucking industry, folks trying to do that on their own.
Yeah.
It's not particularly difficult, but you want to do it right. You want to check all the right boxes. And of course, we do tax preparation for tax season here. Obviously, the consulting is a huge piece if you're maybe new to driving and you need somebody on your team here to help you with fuel efficiency and saving for maintenance, dealing with dispatchers and optimizing loads. We have our entire consulting department that is one-on-one relationship building with you, and they will help you better your business, learn how to make a better profit and run a business. Not just drive the truck, but to run a profitable, successful business.
Well, you're an excellent resource. Now, what is your website?
www.atbs.com.
And you understand trucking. That's so important.
Absolutely. It is the passion. We have videos and blogs. We have so many free resources on our website. So if you want to consider checking us out there and just reading and getting some free knowledge, we want to offer that to really help the industry. If you want more, need more, we are also here to jump on the phone with you and start that conversation.
Excellent. Thank you so much, Michael and Charlotte, for all of this great information. I know that our drivers may not like the topic, but this has been really helpful. I really do appreciate it.
Thank you.
Absolutely. Thanks, Shelley.
You've been listening to the Truckers Network radio show here on TNCRadio.live. Stay tuned for more great programming coming up this afternoon and this evening right here on TNCRadio.live. Thank you for listening to another great interview on TNCRadio.live and the Truckers Network radio show. All of the material you hear on TNCRadio.live on our website, our broadcasts, or our podcasts are copyrighted. There can be no distribution without the express consent of TNCRadio.live and its partners. For inquiries, write us at info@tncradio.live. And don't forget to subscribe to the podcast of the Truckers Network radio show.